Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Dalal Street ends a steady session at the day's high point. Sensex gains nearly 500 points. Nifty reclaims 19,000. Rupee ends the day with minor gains against the dollar. Stock markets rise across the world as US Federal Reserve holds interest rates steady once again, sparking hopes that the tightening cycle could be over. But Fed chair says the fight against inflation is not over and refuses to rule out a rate hike in December. Kotak Mahindra Bank set to give up control of its general insurance subsidiary. Zurich Insurance will invest over 4,000 crore rupees to buy a 51% stake in Kotak General Insurance. Zurich is the first foreign insurance player to enter India in the last 8 years. Britannia and Dava report a mixed bag in Q2. Profits beat estimates even as revenue growth marginally misses expectations. Both FMCG companies report slower than expected volume growth. Israeli forces claim dozens of Hamas fighters killed in overnight operations. Another blast strikes Gaza's Jabalia refugee camp. United Nations says that airstrikes on the refugee camp could amount to war crimes. Services at Gaza's only cancer hospital come to a halt as it runs out of fuel. Delhi Chief Minister Arvind Kejriwal skips ED summons in the liquor excise policy case, leaves for Madhya Pradesh where he is scheduled to campaign ahead of the elections. Kejriwal had earlier questioned the legality of the summons and demanded the ED to withdraw the notice. The government responds on the Supreme Court's selective anonymity charge against electoral bonds, assures that the Finance Secretary cannot call the SBI for donor details. The court observes that electoral bonds shouldn't end up legitimizing kickbacks and become a channel of quid pro quo. India's nodal cybersecurity agency sends a notice to Apple. This after opposition political leaders and journalists get mobile phone alerts over possible state-sponsored attack. Apple has said it can't provide more information as it may help the attackers adapt their behavior and evade future detection. All right, let's start with the day's market action. After declining for the last two sessions, stock markets clawed back today. Sensex gained nearly 500 points to get back above the 64,000 mark. The Nifty also gained nearly 150 points to reclaim the 19,000 mark. Bank stocks gained in tandem with the blue chips, but mid-caps outperformed with the mid-cap index gaining over 1% today. From stocks to the currency market, the Indian rupee ended the day with minor gains as it remains near the record low against the US dollar. Yesterday, the rupee hit a record low of 83 rupees and 29 paisa. Today, it gained about 5 paisa to close at 83 rupees and 24 paisa against the greenback. The US Federal Reserve, as expected, left interest rates unchanged for the second consecutive time. The decision also included an upgrade to the committee's general assessment of the economy. Fed chair hinted that the central bank may now be finished with the most aggressive tightening cycle in 4 decades. However, Powell said that the Fed is not declaring victory on inflation yet and that there is still a long way to go.
The stance of policy is restrictive, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Inflation has moderated since the middle of last year, and readings over the summer were quite favorable. But a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. The process of getting inflation sustainably down to 2% has a long way to go.
Right, on to the earnings corner. Tata Motors has come out with its second quarter numbers. Net profit at 3,764 crores, fallen short of street estimates. Revenues have met street. Parikshit Luthra is here with the numbers. Parikshit, what is the number looking like?
Well, as far as consolidated revenues for Tata Motors, largely in line with CNBC estimates, and this coming in at around 105,000 crores. EBITDA coming in at 14.4 thousand crores versus a CNBC poll of 13,681 crores. Net profit coming in at 3,764 crores versus a CNBC poll of 4,039 crores. Of course, JLR sales have contributed to Tata Motors' growth in a significant manner. We've seen strong EBIT growth. The margin guidance for EBIT has been raised to 8% for FY24 from 6% earlier. And the growth has been coming because of lower commodity prices, the operating leverage and volume ramp up at JLR as well. We've seen strong growth in the EV segment as well. The company has said that they're optimistic on demand going forward, even though they do expect moderate inflation and overall a stronger performance in H2. We are joined by Ashwin Patil, research analyst at LKP Securities. Ashwin, thank you very much for joining us. Take us through the big highlights of the Tata Motors numbers. How do they look to you?
Look quite impressive to me, at least, at the revenue front, it was quite in line with our expectations as well as the street expectations. And the main USP of these numbers was that the JLR numbers, the margins at JLR, at 14.9% was really very impressive. And we know that how the product profile or the product mix is panning out for them. And the order book is currently at about 168,000 units, out of which Range Rover Sport and Defender are forming the bulk, about 77%. So I think this quarter as well, the numbers were quite impressive with the main models of JLR performing well in different geographies as well as in the domestic markets. We saw that the commercial vehicle industry is slightly going through a slowdown, but the similar story has been observed on the passenger vehicle front as well. But JLR has been the top performer for the overall consolidated numbers of Tata Motors. And going forward, I think that improvement in various geographies for JLR should aid the numbers going forward.
When it comes to the domestic business, especially Tata Motors passenger vehicles and also the commercial vehicles, it is a bit of a mixed bag. Take us through some of the challenges that you feel were there for Tata Motors, and what's your outlook going forward?
See, as far as the commercial vehicle segment is concerned, we all know that there is a slight kind of a slowdown over there, because the last year was strong, and going forward on a high base, as well as a slight slowdown in certain economic activities in the country. I think that commercial vehicle, the cyclical business of commercial vehicle is facing some sort of softness, and therefore this year we are not expecting something to a great kind of numbers, maybe like somewhere near a lower single digit or a mid single digit kind of growth for the industry we are factoring in. Also for the passenger vehicles, I think the SUV segment has been one of the star performers, and that is leading the growth to the passenger vehicle segment. We know that in last couple of years the chip shortage troubled this industry, but now since it has eased down, going forward the passenger vehicle business should pan out well, and it should post a growth close to about 10 to 12% this year.
Right. And the company also, of course, saying that there was a transition to newer versions of some models, and possibly because of that, there was a decline in volumes. And we have 15 to 20 days of the festive season all the way to Bhai Dooj also left. Coming to JLR once again, the EBIT margin coming in at 7.3% in Q2, 8% in H1. The target margin for FY24 has been increased from 6% plus to around 8%. How do you see this, and how do you see this contributing to Tata Motors' overall growth for FY24?
Definitely. I mean, the EBIT margins were facing a lot of challenge. Last year, we saw that, hardly they posted close to about 3% kind of EBIT margins, and now they are at about 7.3%. So more than double they have, clocked in for JLR. So that is really very impressive. We know that the currency environment has not been that, very, it was not very hawkish as such, and things are easing out for JLR in various geographies. Last year also we saw that China facing very uncertain times through COVID coming and going again and again. So that has troubled the Chinese geography. Now it is settling down a bit. Also US and Europe, though not great kind of growth, but still some sort of better performance has been seen in this year. And as far as the model performance is concerned, for JLR, almost all the models are performing well. So that kind of growth we are seeing for JLR this year, and that the product mix improvement is leading to a better EBIT, and therefore we think that going forward, definitely the company can touch the margins of about 8% on for JLR EBITs.
All right, Ashwin. Of course, the better chip availability and continued traction in new models has helped JLR, and the company is expecting wholesale volumes, production, all to gradually increase in H2 of FY24, and they're looking at a free cash flow of around £2 billion in FY24. Thank you very much for joining us. With that, Archana, it's back to you.
Right, thank you, Parikshit, for those numbers from Tata Motors. Let's talk about Tata Steel. That reported a net loss of nearly 6,200 crore rupees in the second quarter. This included a one-time loss of 6,900 crore rupees, which the company attributed to impairment and restructuring. Revenue declined by about 7% and margins also contracted. There were reports that Tata Steel could announce job cuts in the UK at its Port Talbot plant, but no announcement was made, and CEO TV Narendran said the company is in talks with the employees' union and the British government.
We are in the process of going through the consultations with the unions. We are also obligated to have meaningful consultations. We're doing that. Obviously, we've agreed to some framework with the government, but that is subject to taking it through the consultation process, which is what we're going through currently. Whatever we need to provide for that restructuring has already been provided, and that's why we've taken the hit that we did in Q2.
Staying with earnings, Adani Enterprises' net profit dropped 51% year-on-year to over 200 crore rupees in the September quarter. Revenue also dropped over 40%, while EBITDA grew 39%. The company has attributed the dip in profit and revenue to correction in coal prices. On the other hand, it was a strong quarter for Adani Power. The company's quarterly profit rose almost 10 times, while margins improved to 40%. FMCG majors Britannia and Dava have both reported a mixed bag in the second quarter. Both the companies reported a beaten net profit, while revenue marginally missed expectations. Mangalam Malu joins us with the details. Mangalam, take us through the numbers, please.
Britannia was higher in today's trading session, and this despite a top-line miss. There was a top-line miss largely because of weak consumer sentiment. At the same time, there were strong competitive pressures as well, and the company had to take some price cuts to pass on the benefits of raw material reduction to the consumer. So as a result of which, the revenue of the company grew by just around 1.2%, with 0.2% volume growth as against street expectations of 2 to 3%. But what was really good, and this was really the cream in the middle, was the operating performance. The EBITDA was a good 100 crore above street expectations. Gross margins improved by 400 basis points, and nearly 350 basis points were passed on or flew through to the EBITDA itself, and as a result of which the net profit was above expectations as well. Now, the company said that demand conditions were challenging, especially in the rural part of the country, largely because of the 2-year high inflation that we've been seeing. But they do believe that there are some signs of an uptick given the festive season, and going forward with the company's focus towards new products and adjacencies, maybe there could be some positivity in business going ahead with Britannia's own cost efficiency program. So the outlook was fairly positive as well. As far as Dabur is concerned, the revenue, EBITDA, as well as margins and net profit were above street expectations. Mild beat on the revenue with a growth of about 7% odd, and the EBITDA margins at 20.6% were also above street expectations of 20.1% as well. And the net profit was a 10 crore beat as against expectations, but this also included a one-off legal expense of over 30 crores. So if you adjust for that, it was a much higher beat. Importantly, the volumes, while they came in at 3% versus street expectations of around 4 to 5%, if you adjust for the Badshah acquisition, the volume growth was closer to 6%, 5.8% to be precise. And the management was confident of the second half of this year with low double-digit to high single-digit sort of revenue growth projections with mid-single-digit volumes, and the margins being maintained around that 19.5% mark itself, with strong driver being the food business, which they intend to exit this year with a run rate of 500 crores.
Thank you, Mangalam, for those numbers. Shares of Godrej Properties rallied in trade on the back of a strong quarterly performance. The real estate developer posted its highest ever quarterly sales, with booking value doubling compared to last year. Net profit rose 22%, while collections grew 23%. The company also said it has added 7 new projects across 5 cities. British oil major Shell posted an inline quarter buoyed by higher oil prices and refining margins. The company's quarterly profit stood at $6.2 billion, growing sequentially. However, profit declined compared to last year as the Russia-Ukraine conflict pushed oil prices higher. The company also announced a buyback of $3.5 billion to be carried out over 3 months. The big corporate story we are tracking: Zurich Insurance is set to acquire a majority stake in Kotak Mahindra's general insurance arm. The company will invest over 4,000 crore rupees, and the deal is expected to be completed by June next year. Ritu Singh joins us now on this big story. Ritu, take us through the deal contours.
In what is the single largest investment by a global strategic insurer in an Indian non-life insurer, Kotak Mahindra Bank and Zurich Insurance have entered into a definitive agreement for a transaction whereby Zurich is going to invest approximately 4,051 crore rupees to acquire a 51% stake in Kotak General Insurance through a combination of fresh growth capital and share purchase. Further, Zurich is going to acquire an additional stake of 19% within a period of 3 years from the initial acquisition. The proposed transaction values Kotak General Insurance at approximately 7,940 odd crore rupees on a post-money valuation, and the valuation based on gross premium of the company works out to market cap to premium ratio of 6.9x. Now, the initial transaction of 51% stake is expected to be completed by June of next year, and the deal, of course, is going to be subject to various regulatory approvals. Now, with this, Zurich Insurance is also going to be the first foreign insurance company to enter India in the last 8 years. Remember, the FDI limit in insurance was only recently raised to 74% in 2021. Kotak General Insurance business, now it's a small business. It has a 0.5% share in sector premium and forms just 0.3% of Kotak Bank's consolidated net worth. For Kotak Bank, this works out to about 2,442 crores of equity from the transaction, and that would result in the bank's Tier 1 ratio improving by 0.49%.
Thank you for that, Ritu. Zurich Insurance is all set to become the first foreign insurance company to enter India in the last 8 years. That's not all. Zurich Insurance's 4,000 crore rupees investment is the single largest investment ever in Indian insurance sector. Yash Jain joins us with more. Yash, tell us more about the valuation of Kotak General Insurance.
Well, before we come to the valuation, let me just address the fact that what does Zurich Insurance really get out of this transaction? We've spoken about how this is the largest transaction in the Indian insurance space, and this is what Zurich Insurance gets. The first one is access to a strong distribution bancassurance network of about 1780 Kotak Mahindra Bank Insurance branches. The second one, a brownfield entry into India, which is being termed as the most attractive insurance market in the world. And finally, a controlling stake as far as Kotak General Insurance is concerned, and an opportunity to leverage the Kotak franchise. Now let's quickly look at the valuation. As far as the valuation is concerned, if you look at the gross written premium aspect of it, the transaction happens at 4.85 times price to gross written premium. The company is relatively smaller, still loss-making, and if you look at the valuation from that point of view, it's a very good valuation which Kotak Mahindra Bank derives out of this particular transaction. The market share for this company is just about 0.5%. Growth has been 35% in the first half, and as I said, loss-making, a loss of about 8,300 crore rupees in FY22. Compare this to two of the other listed players. ICICI Lombard, that is trading at 2.93 times price to gross written premium, has a higher market share of about 9%, H1 FY23 growth of 18%, and profit FY22 for about 1271 crore rupees. New India Assurance also valued at just 0.62 times gross written premium, market share of 13%, H1 growth of 8%, and FY22 profit of 164 crore rupees. So for the entity, the kind of business that it has, it's a very good deal as far as Kotak Mahindra Bank is concerned in terms of the valuation parameter.
All right, thank you, Yash, for that update. On that note, it's time for a short break, but coming up next, the government responds on Supreme Court's Welcome back. Let's talk about the latest on the Israel-Hamas war. Israel has bombed the densely populated Jabalia refugee camp in northern Gaza for the second time in 2 days. The Israeli military said the strike targeted a Hamas command and control complex. The United Nations said that this attack on the refugee camp could amount to war crimes. Jordan has recalled its ambassador to Israel, rejecting and condemning Israel's attacks in Gaza. One of the few remaining hospitals serving northern Gaza said its main generator had gone out of service, deepening fears for critical patients. Meanwhile, the head of the UN's Palestinian Refugee Agency called scale of devastation in Gaza as unprecedented and renewed calls for a humanitarian ceasefire. Hundreds of injured Palestinians and foreign nationals have begun arriving in Egypt from Gaza through the Rafah border crossing for the first time since the Israel-Hamas war began in early October. The foreign nationals include many US citizens. So this is the big story that we are tracking as far as the international updates are concerned. Moving on, the Supreme Court has concluded arguments in the electoral bonds case and has reserved its judgment in the matter. The top court also directed the Election Commission to furnish data on donations received by political parties till September 2023. The court also observed that Parliament must develop a fresh system to ensure transparency. The top court also said that we shouldn't end up legitimizing kickbacks and allow it to become a channel of quid pro quo. Ashmit Kumar, who's been tracking this case very closely, joins us on the final day of the proceedings. Ashmit, arguments concluded in 3 days. Tell us more about what happened today.
Well, quite swift for the Supreme Court to wrap up arguments within just 3 days. We saw 3 days of arguments concluded by the end of today. Importantly, here are the takeaways. Number one, the Supreme Court has sought for updated information from the Election Commission as of September 2023 on 2 counts. Number one, donations received by individual parties, and number two, the total expenditure, election expenditures incurred by these parties as of September 2023 has to be submitted in a sealed cover. Secondly, as far as the centre itself is concerned, they sought to refute the observation that was made by the Apex Court yesterday. The Supreme Court said that electoral bonds provides for selective confidentiality because the SBI is privy to the information regarding donors. The law enforcement agencies can get access to that information, and through them, the ruling party, the government of the day, will also have access. That sought to be refuted by the centre. The centre said that made a submission by the SBI chairman himself, saying that there is absolute confidentiality. The data is stored in a database. It is not shared with the government or with the ruling party. It is not available for the finance secretary to just make a call to the SBI to ask for that information. That cannot be provided, stated on affidavit before the Apex Court. In fact, the centre went on to observe that the reason that the confidentiality has been provided because it is sought by the donors themselves because they want to protect themselves from political retribution. That's the first leg of the arguments. Importantly, the Attorney General was also present in court today, made his submissions, brief submissions lasting about 30-odd minutes. He submitted before the Apex Court that his affidavit was misreported in the media, that he never argued that there is no right to know, but rather he said that there can be no right without restrictions, said that the right to know about the criminal antecedents, that is a rational, actionable right that is towards a specific end, but to seek a broad right with respect to political donations is not healthy for our democracy. And with that, closing the arguments for the day. So all eyes now on the Apex Court for more clarity on whether the electoral bond scheme is legal or whether it will be voided. Eyes on the Apex Court. Back to you.
All right. Thank you, Ashmit, for that important update. Moving on, India's nodal cybersecurity agency has sent a notice to Apple. This after many opposition leaders and journalists claim to have received mobile phone alerts over possible state-sponsored attack. Apple has said it can't provide more information as it may help the attackers adapt their behavior and evade future detection. Delhi Chief Minister Arvind Kejriwal has skipped Enforcement Directorate summons in the liquor excise policy case. He has left for Madhya Pradesh, where he is scheduled to campaign ahead of assembly elections. Kejriwal had earlier questioned the legality of the summons and demanded the ED to withdraw the notice. The Japanese government has unveiled a $113 billion package, which will include tax cuts to cushion the economic blow from inflation. The country's Prime Minister said the government will fund the package with a supplementary budget of 13 trillion yen. The economic stimulus package will now be submitted to the country's parliament for approval. And with that, it's a wrap on this edition of Business 360. Thank you for watching. Stay tuned to CNBC TV18. The news continues on the other side.